This is Dr. Deborah Ekstrom for the Money Loves Women podcast. Today I'd like to introduce Brad Constanzo, and he is very simply a investor and a consultant. And I just found out that he is a recovering financial advisor.
Yes,
So
ma'am.
anyway, welcome, Brad.
Thanks.
We're going to talk about some really interesting things today, but before we get into things like crypto and Bitcoin and gold and investing and all the kinds of things that you do and the fun you have, tell us a little bit about your growing up years, where you
Yeah,
came from I assume in our country, and what influenced you and what led you down this path.
it's a great question. And, Dr. Deb, I'm honored to be on a show about money loves women. I have a lot in common. Like, I love women too. I've got a wonderful wife and
Yay!
mother and people that I celebrate. And I actually think it's a fantastic thing. What you're doing is helping to bring, some really great financial and investment education to women, because I think it's an area they've been sorely neglected by mainstream society for a long time. So I applaud you for bringing a lot of these topics, uh, you know, to the wonderful women out there who are, you know, really women drive the economy. They control most of the spending, which keeps the wheels running. And it's a shame when they don't really understand how to, make their money work for them. So thank you for doing what you do. My background, so I grew up in just outside of St. Louis, Missouri. My dad had been a recovering financial advisor. He worked with what was the name of the company he worked with? I can't even remember right now. But growing up, I had a really good relationship with my dad. But it was funny because one of the ways I bonded with him, it wasn't over sports, it wasn't over other stuff. It was over the stock market, and he loved to invest in things. He would sit down and show me from an early age, what are stocks, what is this, what is that. And that was it was interesting. Like, I thought it was interesting, but it was a way to bond with dad. And I remember, because I would read and I would do some stuff, that in eighth grade, everybody had to do a research paper on something. And like, some people did rockets or lasers or something else. And my topic was compound interest. And, and I remember the opening phrase. I was like, uh, I, I remember standing there in my eighth grade class saying, who was it? Albert Einstein once said the greatest power in the universe is not that of the atom or, et cetera. It's the power of compound interest. And then I went on, and it was funny for all of the Gen X, Boomer, and anybody else beyond who used to watch the show Family Ties growing up with Alex P. Keaton, who was like the kind of the nerdy financial kid. I don't know if I was nerdy, but I loved finance and investments from an early age. And whether that was just because I thought it was cool or it was a way to bond with dad, it at least allowed me to create, like, to start to learn about it early. And then I went to school for finance and economics. And I had dreams of working on Wall Street and just the glamour of investment banking and all that other stuff, which that was when I was a kid. And as I got older and I got through college, I realized, yeah, I don't know. I'm kind of burned out on a lot of this stuff. I'm going to go, I'm going to go do something else. I'm going to prevent a midlife crisis because I've been too adult for too long. I went and got a job at Disney and I started screwing around for a little while, took a couple years break. And then I became a financial advisor. I went back to those roots and I became a financial advisor at Prudential Securities. I was age 25. So this is in the mid 90s. And I was picking up the phone and smiling and dialing and cold calling people and trying to get them to invest their money with my very inexperienced self. And this was during the late 90s. The stock market was on this tear. Like, you didn't actually need a financial advisor to make money. You threw a dart at the board, you hit a tech stock or a .com, and you made a bunch of money. Well, then the 2000 came along, and I had amassed about $100,000 in savings, and it was all in the stock market. And I had discovered at the age of 26 margin. They're like, oh, this is great. When everything's going up, you can just borrow money and double it every other day. And then when Mary Meeker came out in 2000 and said that, yeah, it looks like we're about to start, a major fall, and everything fell to crap. Within about 2.5, 3 months, I was broke. I went from having it all to having nothing. And that was from gambling in the stock market, right? So I learned a couple of hard lessons there. And then throughout the next 5 or so years, I still was at Prudential Securities. I was working in another role, working with financial advisors, helping to, just help work with them on their portfolios, and not their portfolios, but their client portfolios. And I would, just really try to help them increase their business. But I wasn't dealing with clients as much. And in that time, to be really frank, from with my own investments, I was deer in the headlights, and I was scared because I just got burned by the stock market, and something I loved burned me really bad. Made a bunch of money in real estate investing, and then I was like, oh, this is great. Now that gambler gene kind of came back, and I had a, a close friend that worked for an oil and gas company and talked about these natural gas wells that they were drilling in Texas. And I put $25,000 in one of those. The numbers all made sense. Like I come to things not as a gambler, but I look at things pretty astutely, do a lot of due diligence on them, and put the money in there. What I didn't realize was that natural gas and oil wells, et cetera, these are general partnerships, and they have cash calls. So if something goes wrong, they can ask for more money from the investors, and if you don't give them money, you can use your entire investment. So my $25,000 investment became a $100,000 investment before it went bankrupt, and so I lost pretty much everything I had twice in my life. That was fun. Now, it was a while. This was by the way, yeah, that was maybe the early 2000s. The stock market great financial crisis came along, and I made one really brilliant bet, which was in June in 2007. I just didn't like the way everything smelled, and I went completely to cash. I had six figures at this time. I went completely to cash, and I sat out, and I missed this massive drop in 2007, 8, et cetera, and 9. Problem was, I didn't get back in. Right. And I missed one of the greatest bull markets. I got back in a little bit, and I missed one of the greatest bull markets stimulated by quantitative easing that we've ever seen. And I sat on my hands. I did invest in some other stuff. I invested in my own business, which paid many, many dividends. But that's really kind of that's kind of, my financial investment backstory up until the past few years, where I started to really want to understand money, the roots of money, how it all works, the system that we're in. Discovered, crypto, Bitcoin. The two are not the same, and a lot of different alternative investments. So even though I've been burned quite a few times, I've never let it, stop me. You can slow me down, but you can't stop me. And some things have worked out pretty well, some things have not, but I continue to be a student of the game and continue to try to make my money work for me. So hopefully that a little more than a nutshell.
Yeah, that's great. What was your mom doing? Your dad was doing financial investing,
My
loved the
dad,
stock market,
my
talked to the
dad
stock
did,
market.
yeah, my dad did financial. Well, he was a financial advisor, and then but when I was born, he was like the head of labor relations at a steel mill. So he was no longer in the
Okay.
because he got out of being a stockbroker like in the uh, energy crisis of the early 70s, like 72 or 3 or something of that nature. And my mom was an account executive at a television. They sold television advertising, so she was kind of brokering TV ads, but she was an executive back in that time. So my mom always made really good money. Probably throughout the 80s and maybe the 90s, whenever she was working. She was making about $100,000 a year, which was amazing for a woman at that time, who had not graduated from college. You know, she was kicking butt. But she also didn't know anything. She still doesn't know much about investing, right? That was always dad's world. Dad and Brad would do the investment. Mom knew how to make the money and spend the money, but she never really tried to pay attention to investing the money per se, because she had people to take care of her on that, and still does. But that was kind of what her role was.
That's lucky that she still does, because that doesn't always happen. I,
Yeah.
I heard a very interesting statistic recently that 98% of women at some point in their life become primarily responsible for their own financial well-being. And I thought that was a frightening and fascinating statistic,
Well,
because
it makes
so many
perfect
women,
sense
yeah, it makes
when you
perfect
think
sense,
about
right?
it.
We
Like the
all outlive
divorce rate.
husbands.
Yeah, well, if you look at like whatever it is, 50% divorce rate, and then the fact that women typically live longer than their husbands, yeah, it
Yes.
makes sense that they're either gonna leave them or outlive them, and at some point, it falls on them to really understand their finances.
Yes. So it's a gamble
Yeah.
to not understand your finances.
Yes.
Well, it's interesting. You learn some really great lessons by making some mistakes. you were young, so you
Yeah.
could recover pretty easily, but it doesn't matter when it happens, you have to get back in the game, right? And
Right.
then you discovered cryptocurrency, you discovered Bitcoin. Tell us about your forays. Well,
Yeah.
first of all, tell us what Bitcoin is, tell us what cryptocurrency is, tell us what blockchain is,
Okay.
and then how they all relate to each other. Because we hear about this all the time. Some people are very scared of what's going on because of the
Yeah.
newspapers and cryptocurrency. So kind of give us the rundown.
Absolutely. So a lot of people are familiar at some degree. They've heard of Bitcoin, they've heard of crypto, especially because it's been all over the news. Like, it's the bubbles and the busts, and fortunes are made and fortunes are lost, and it looks like a gigantic casino. And to a large degree, they are right. However, I stumble first. Well, first of all, let me explain a little bit about what it is. I'll preface it, then I'll tell you how I discovered it, and we'll circle back and go a little deeper. And I want to talk about the things that I think are the most important things that I've learned over the past several years. So Bitcoin is a is a is a digital. You can think of it as a digital currency. A lot of people call it that. That's actually not quite what it is. Bitcoin is, there's never been an asset like Bitcoin in history. It is a duck-billed platypus, meaning it's like a combination of all these different, like a duck-billed platypus looks like a duck, it looks like an otter, it looks like a, something else. It's like all of these different pieces of something else put together, and it's its own unique animal. Bitcoin is very similar. It's a piece of cryptocurrency. It's a distributed ledger, meaning it's like, I, I always run the risk of trying to go really basic on this because I try to start at different areas, and I don't want to confuse people. So I want to let me circle back and say this is how I discovered it. You can make a lot of money with this, Brad. You should put your money in. I'm like, what is it? They're like, it's Bitcoin, it's Ethereum, it's this, that, and the other. Just put some money in and then start to pay attention to it. I was like, yeah, but what is it? They're like, it's like digital coins. It's like, okay, well, I'm not going to pay attention to it if I don't have a little bit of money into it. So I'm going to dabble. They said, go to coinbase.com and buy some Bitcoin. I still didn't even know what I was buying at the time. I'm like, all right, I'm buying some digital asset, whatever that means. And I put this is back in 2017, early 2017. I bought like $5,000. I took $2,500. I put it in Bitcoin, which I'd been hearing about for 5, 6, 7 years through other friends talking about it. And then I put another $2,500 in Ethereum. And then I was like, all right, now that I got a little money into it, maybe I'll start figuring out, well, what is this? What did I just buy? At the time for me, 5,000 was enough. Like it was small enough I could kind of gamble and just see what was up. So, and I remember back in like 2012, 11 and 12, some friends of mine saying, man, Bitcoin is the future. You got to get in on this. It's the future of money. I was like, you don't know what this thing is so volatile. It's crazy. Money has to have a store of value. It's got to be stable. It's got to have things priced in it, et cetera. Like you guys don't know what you're talking about. That's just silly. And I dismissed it wholeheartedly because I obviously was an expert in investing in money. I understood more than they did. This was child's play. Well, I put that $5,000 in, and it just so happened that year, 2017, was a year of a massive run. Where when I bought Bitcoin, I think it was like $3,000, and it went up to $20,000 that year. I was like, wow, I just 7x'd my money in a year, and I still barely knew what I bought. Keep this in mind. I got in, I wrote it up, I didn't know when to sell it, and I wrote it all the way back down, and then I ignored it. Like, so I had like $5,000 in Bitcoin and Ethereum became something like, I don't know, $25,000 or $30,000 within the year. And I wrote it back down, and I still couldn't explain it to somebody. What do I own? Now let's fast forward to uh, July of 2020. So a friend of mine who was telling me about Bitcoin back in 2013, we reconnected, and he says, the bull market's coming back. You got to get in on this. If I can help you, he goes, I've made about $30 million in this. If I can help you in any way, I would love to. And I was like, all right, I'm willing to take a look at this again. You say the bull market's coming back. I'm willing to dabble. He goes, well, now's not the time to dabble. Now's the time to study, put a little more in, study, and figure out what the heck this is, because your life will change. So now I began studying. Now, they say that Bitcoin, specifically, one of my favorite sayings, is it's a global monetary revolution disguised as a get rich quick scheme. Let me repeat that. It's a global monetary revolution disguised as a get rich quick scheme. So a lot of times it's the exact opposite, right? It's something else, but in reality, it's a get rich quick scheme. So first of all, this is how I discovered it, right? This is how I started to get into it. I did not study a bunch and figure out what I was doing. I just kind of got in and then figured it out. Now, when I got in, I put a bunch of money in Bitcoin, and then I put a bunch of money in Ethereum, and I put a bunch of money in God knows how many other coins, 20, 30 different coins. And at this one point, I had like $400,000 invested in crypto all over the place. And I got in early. I was up over $1 million in profit. And I started to watch, and then I, within about a year and a half, made $1 million in profit, like 3 or 4x my money. And then I started to see it just go down, 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 down. And now I will be the first one to say that over the past year, it has been a bloodbath. I've lost all of those gains, right? They have gone, the gains have gone away for the most part. But I'm still a big believer in one coin, which is Bitcoin. Now I kind of want to get back to what it is, but I think it's important that your audience understands what my journey was and like where my mind was that when I got into it, I was just here to make money. I was like, oh, this is a way to get rich quick. So Bitcoin was developed in, I want to say developed in 2000, really released in 2008, but I think released to the public in January of 2009. And there was a anonymous, either developer or group of developers who goes by the name of Satoshi Nakamoto. To this day, nobody, well, very few, if anybody, knows who Satoshi Nakamoto is. Completely anonymous. And he saw the problems with the global financial system in that we were having during the great financial crisis. And I pulled up a quote the other day, and I'm trying to find it right here. This is one of the things that Satoshi said when he was developing this cryptographic code that he saw could serve as digital cash or money. And he said the root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency. But the history of fiat currencies, which is what we're in, is full of breaches of that trust. Banks must be trusted to hold our money and transfer it electronically, but they lend it out in waves of credit bubbles with barely a fraction in reserve. We have to trust them with our privacy, trust them not to let identity thieves drain our accounts. So it was born out of this being fed up with the global monetary system, which is it's the biggest crime of the century, which is the way that our fiat money system is structured, in my opinion. Right? The Federal Reserve cartel, which by all definitions of a cartel, it is a cartel based upon collusion, getting rid of competition and control, and inflating the monetary supply on a whim, backed by absolutely nothing. And it has caused unbelievable amounts of damage, both in terms of wars, income inequality, and the fact that you can no longer save money. Saving money does not exist. As you might know, like inflation completely eats it away. You cannot save money. These days, if you want money to not be completely destroyed by inflation, you have to put it into risk assets. You have to put it into real estate, or you have to put it into businesses or stocks or bonds, or you have to put it into something else. And God forbid you just want to hold on to the hard-earned money you've worked for and not go broke after a while. Bitcoin, how does that fit in? Well, Bitcoin, and once more, I separate Bitcoin and crypto completely. Crypto, to me, those are, for the most part, it's technological innovations that may or may not find a use. They're trying to compete, with Bitcoin. They cannot. It's not even a thing. Those are little tech stocks. Bitcoin is money. So what are the properties of money, right? So, money should be a store of value. It should be a unit of measurement. Ideally, money should be hard to come by, because if it's not, then it just becomes counterfeitable. So, and Dr. Deb, please stop me if I'm on some kind of a tangent. Then you want to either stop me,
because this is great. I'll just you're teaching like crazy. I'm loving every minute. Keep going.
Good. So
money should be a store of value. It should be a unit of measurement. That's great. That's exactly what money should be.
Right, exactly. And it should be fungible. It should be interchangeable. Actually, these are the traits of money, right? It's interchangeable, or also called fungible. If I give you $1 and you give me back $1, hey, we can interchange it, right? $1 is $1. It should be non-consumable. right? As opposed, let's say you're bartering and you're giving out bread for something else. It should be portable. You should be able to take it with you. It should be durable. It should be something that withstands time. So if I do store it somewhere, it's not going to degrade. It should be secure, meaning ideally it should not be able to be counterfeited. It should be easily transactable. So if I give you something, you give me something, it's easy. And it should be scarce. That's the other thing, because this kind of comes back to cannot be counterfeited. It should be scarce. If you and I are trading gold, for instance, and we'll talk about gold, gold is scarce. It's hard to find gold. If we were trading pebbles, well, those are everywhere, or grains of sand, right? All of a sudden, there's no value in that. Then there's three other aspects of money that have come into play, especially with technology. Is it sovereign, meaning is it government issued, or is it issued by the people? Is it centralized and controlled, or is it decentralized and without control? And now there's, with technology, is the money smart? Is it programmable or not? Now, it's been said, and I love this, that, a lot of people think, well, the government makes the money. Well, government doesn't make money. Government makes currency. They determine what currency is. People determine what money is. We determine what has value. So if you want to trade, like right now over in Zimbabwe, currently there's insane inflation. Over in Argentina, there's insane inflation. The dollars, these are Mexican pesos, right? But imagine that these are Zimbabwe dollars. There's, $1 trillion bills. It's insane that, like, these have no value. And the people are realizing that the government is saying this has value, but it's not valuable to me. I'd much rather go back to barter. I'll trade you eggs for your milk, right? That's what value is, because money is simply the ability for individuals to exchange value over time and space, right? So, fundamentally, like, what is money? Well, I'm trading the work that I've put into something, and I'm emphasizing work because that's important when we talk about Bitcoin. I'm trading the work that I put into something for the work that you put into something, right? If I'm a potter and I make this coffee cup right here, with my own time and energy and resources, and I sell this to you for $5. Well, now you've done something to earn that $5, right? So you're going to give me a part of your life force, and I'm going to exchange it another part of my life force. So money is a way we exchange the energy we have expended, which represents, like, our life force at a very fundamental level. What does this have to do with Bitcoin and money, et cetera? Well, let's go back to gold. So gold has always been this place where you put your money as a hedge against inflation and currency debasement, which is really the same thing, where the value of the dollar gets lower and lower because the government keeps printing money. And gold for 6,000 years has been recognized as money. It's interchangeable. People want it. The government doesn't really control it. They can buy as much as they want, but ultimately you can go find gold somewhere, and now you've got gold and you can exchange it with people without permission. And gold, because it's so scarce, it has a tremendous amount of value. And they call it hard money. And one of the reasons they call it hard money is because it's hard to make that money. It's hard to make gold. You have to expend a tremendous amount of time and energy and resources and money in order to extract the gold from the ground. And that means that if the price of gold goes way up, and the gold miners are like, wow, if we go find more money, we're going to be able to sell this, and get rich. Well, it's hard to do that, right? It's not easy money. Easy money is what we have right now. This is when Jay Powell over at the federal cartel pushes a button, and I'm simplifying the matter, but he says, turn on the money printer. Let's go. Let's just create money backed by absolutely nothing but the full faith and credit of the United States government, which has betrayed its people many, many times, betrayed the trust, completely, debased our purchasing power. And that's what it's based on. It's easy money. Hard money means it's hard to create. Okay. So some of the traits of gold is, it is fungible. If I have a little piece of gold, you have a piece of gold, we can trade it back and forth. It's not consumable. It's fairly portable, but this is actually one of the big problems with gold, is that it's hard to transfer a large amount over over time and space, right? If you're trying to transfer $1 billion worth of gold, for instance, you better have a heck of a big truck. It's divisible, but it's not highly divisible. I mean, you can shave off little, gold flecks. It's somewhat secure. It's really hard to counterfeit, but it's not impossible. A lot of companies of countries like China, I think, recently bought a bunch of counterfeit gold. It's not that easy to transact in, right? You either have to carry it with you, or, as I said, you have to shave off a piece, and it is pretty scarce. But there's a lot of gold out there still that has to be mined. Now, in the face of banking crisis, in the face of inflation, et cetera, gold's a great place to be, because it will ideally protect your purchasing power. Because as the value of the dollar goes down, the value of gold typically goes up. And it's a great place in times of crisis like we are in now to store your money. And I own gold. But let's compare that now to Bitcoin. Let me go back to what is Bitcoin. So Bitcoin is a ledger. It's a database, right? Well, why is that valuable? So back in the old times, or like prehistoric times, Dev, if it's you and I, let's say we're close friends, or we're in the same family, and you do something for me and I do something for you, we could write that down in a ledger because we trust each other, right? We could have a little book, and we could say, Brad mowed Deborah's lawn, and Deborah made Brad dinner. Okay, we exchanged value, right? So there's a value exchange there. Or, if we're doing something else, like, right, we're writing it down, but that requires trust. So then what happened is objects such as gold, silver, etc., became money, because in the absence of trust, you need something else. And that is a hard money that is hard to be counterfeited, but that both people find valuable. So in this case, let's say it's a gold coin. So I may give you a gold coin, and you know that, okay, this is hard, this is real, it's hard to find, it has value to you, it has value to me, and you don't need to trust anybody. As long as you can test that gold is real, you just transferred value without trust. But then the governments got a hold of this, and they started to buy up all the gold, and they started to realize this. And then they started to create currencies backed by gold. So they were like, we got gold over here, but instead of dealing out gold, we're just going to give you pieces of paper. In this case, here's a Mexican peso. As I said, I just had it on my desk. But this is a piece of paper. Now, this represents gold. So you can exchange it for gold, but gold's hard to carry around. Why don't you just keep this piece of paper with you, or this checkbook? And then what the government started to ease all these restrictions, because they realized, well, wait a minute, what if we just print more paper than we have gold? Not everybody's going to come ask for all their gold back, so we're going to be all right. So maybe we just have 10%, for every, dollar worth of gold, we'll print $10 worth of paper, and more and more. And that's the world we live in right now. We have to trust the government that they're not overinflating this. Now, this comes back to Bitcoin. So Bitcoin is a piece of code. Anybody can read it. It's open source. Nobody controls it. And this code is a digital ledger, just like I talked about in the very beginning. And it's this ledger of like left and right, debits and credits, that exists on tens of thousands of computers around the world. And anybody can run their own Bitcoin node, and anybody can hold a copy of the ledger. And what this allows you to do is have in it, I don't want to get too technical, but this ledger really cannot be breached. It cannot be censored. It cannot be hacked. Because of the way it's set up, once more, I won't go into all the technical details. It is the most secure computer network on the face of the earth, so far even uncrackable by any government. And it's designed that way. It's a very robust, anti-fragile. The more you attack it, the stronger it gets. We could talk for days about this. But because you don't need permission to use it, and you cannot censor it, and you cannot change it, it becomes a ledger that you can trust. There's value in that alone. To say, if I give you this dollar, you give me that dollar, this transaction is recorded. Or if I want to put information on the ledger, I can do that. It's recorded in posterity, and nobody can change that. That's very valuable. Bitcoin is, so there's the ledger, the network of computers, that's the Bitcoin network, and then there's the coin. So the coin is what secures the ledger. In order to do a Bitcoin transaction, it costs some Bitcoin, so you have to own some. And these computers around the world, There is thousands and thousands of computers are called miners, similar to gold miners. And what they're simply doing is solving problems. And whenever they solve this certain mathematical problem that gets harder or easier, depending upon the network, if it solves it correctly, it wins some Bitcoin. Okay, so what's the big deal? How does that matter? Well, these miners are working really hard to produce as much Bitcoin as they can, because obviously it becomes valuable. They can sell it. Now, in the code, uncensorable, you cannot change this. There will only ever be 21 million Bitcoin ever mined throughout history, which the last Bitcoin is scheduled to probably be released into the world in I think 2140. So we'll probably be long dead. But that means that's all there is. It has a perfectly scarce and finite supply. It is the only object that we know of in the universe that is an absolute finite supply of it. And it's a known supply. Can't find any more. Scarcity has value. And that also means that there is no government entity, no individual entity, no corporate, no rich person, etc., who can make this change. They cannot decide to print more. They cannot decide to add more. And every 4 years, the amount that gets distributed to these miners gets less and less. So you've got supply, a limited supply that gets smaller, and you start to have demand grow and grow and grow. And these two fundamental forces alone have driven Bitcoin from zero to today it's trading at about $26,000, $27,000 a Bitcoin. Are you following me so far? Because I'm just kind of doing this off the top of my head. Good.
Yes, you're doing a great job. Continue.
Good. So, and I want people to really understand, like, that if you either only barely know what Bitcoin is, or you have a somewhat of a knowledge, or not at all, it's supposed to be hard to understand. It's actually, once it clicks, it's amazing. Like, oh my God, I get it. But you almost have to earn that. It's hard money, meaning it's hard to produce, but it's also kind of hard to wrap your mind around, because you have to unlearn so many things, and you have to learn so many things about what money is and the way it works. You have to unlearn about all the other crap that we've been taught. And then you have to see it for what it is and look at it from probably 10 different angles. And then it goes, I get it. It's been said that a Bitcoiner is forged. They're not born, you don't just learn Bitcoin. You are forged in this by wins and losses and learning and going, oh shit, you have to read, and then wrap your mind around some stuff. But once more, it's a really worthwhile thing when it clicks. So why do I invest in Bitcoin? Well, as I said, it's a global monetary revolution disguised as a get rich quick scheme. It's got the largest asymmetric risk return ratio in history. So it's only been around since like 2009. In that time, it has had an average annual growth of 200% per year. The stock market over time has an average compound annual growth of about 8%, give or take. 200%. It's brand new. It's still in its infancy, right? In 2009, it did 3,000%. In 2013, it did 5,100 and almost 5,200%. In 2017, it was up almost 1,200%. And then the next year, it was down 72%, and then up 87, and then up 302, and then up 57. And it's absolutely wild, and it's crazy. And for that reason, I don't suggest somebody just goes out and throws all their money into it. But the fact that it's grown through it's had at least 4 or 5 bubbles, meaning insane heights, followed by dramatic lows of dipping 85%, right? Hey, it's one thing if you get in and it goes up 1,000%, that's great. But then if it drops 85% from where it was, that's not so fun, right? However, with all of those bubbles and busts, I think we're on the 4th, or I think we're on the 5th one right now. I can't remember if it's 4 or 5. Every time it goes up higher. And when it crashes down low, it crashes higher. So it's like a stair step. Yes, it goes way up, and yes, it pulls way back down. But when it comes down, it doesn't go down as much as it did last time. And then it goes up a lot higher than it did last time. And then it comes down higher than last time. And although it's a wild ride, it's a very easy to trace the path. Now, what does that mean? Well, it's important. Earlier I mentioned this, it's anti-fragile. Like what doesn't kill Bitcoin makes it stronger. It's got a lot of naysayers and it proves them right every time there's a crash, but then it doesn't crash enough and it doesn't disappear and it keeps on going back up. And then pretty soon people are like, maybe there's something there, right? Maybe there's something to this. So it causes people to look into it, and it causes people to look into it. It's because it looks like this get rich quick scheme. Then it looks like it's a get poor quick scheme. But then it's a a richer scheme, and it causes people to pay attention. Now they go, okay, what is this weird beast that we've put together? What is this duck-billed platypus? And they start to study what money is, and then they start to study what Bitcoin is, and they start to go, okay, wait a minute. It's fairly simple. This is a purely digital asset that has a lot of value because a lot of people believe it has value, which is all that value is created on, is people's belief. Gold doesn't have value unless people believe it has value. You can't prevent me from using it. You can't censor it. You can't take it away. You can't seize it unless I do something stupid with it. I can transport it without permission. I could send you $10 billion in minutes right now. If I had $10 billion worth of Bitcoin and I wanted to send it to you, I don't need anybody's permission. I don't need to go to the bank. I don't need to give my ID. I don't need to do all this other stuff. You can give me a code. I enter it. And within, let's say 20 minutes, it's 100% owned by you, from me to you, for fractions of what it might cost to do it in the normal monetary supply. Like, okay, that's pretty cool. So it's like gold, but it can be sent. So it got all the properties of gold, but it can be sent through time and space instantly without permission. And if I needed to leave the country tomorrow, I could leave the country, go somewhere else, and I could take all of my wealth with me simply by knowing my password to my, to my ledger.
Which
That's
you can't
really
do, of course, we need to point out, which you can't do with anything else.
anything else. Now, it's a, so that's interesting, right? It's interesting. It's like, okay, well, if I get in and if I hold it, let's say there's never really, I don't think there's been a 4-year holding period where you haven't made money. So even though it went up like 1,200% in 2017, and then it dropped 85% down to like 3,000. If you held on to it, in that case, I think it was 3 years, you made your money back. Like in 3 years, like to have an 85% loss in something, and then within 3 years, it's back to even at a minimum, it's not bad, right? So now you're like, all right, there's a way to make money in here. And if you just want to make fiat money, if I just want to make a whole bunch of Bitcoin so I can exchange it for US Federal Reserve notes, that's fine. I can do that. But at the same time, if you start to pay attention to what is happening with the banking crisis, what's happened with the global economic system, what's happening with the global financial elite, and not to sound too conspiratorial, but it is our entire financial system is based on conspiracy, and it's based on control. It's undeniable. You start to see all of the things that are happening, and you see what they're doing to our purchasing power through nonstop debasement, and they cannot stop. You start to realize that, well, wait a minute. What if there was a way to opt out of this system? Protect my assets, protect my privacy, protect my mobility, and then potentially make a lot of money at the same time? Because, we can't beat the government. We can all agree that the existing financial system is a scam designed to keep us, working as hard as we can, or to keep us poor while they all get rich. We can agree on that. There's nothing we can do. Like, they've got a lot bigger guns than we do. So what we have to do is we have to find a more peaceful way to opt out and go, I'm not playing your game. Like, that's fine. You guys can do what you want, but I'm going to buy Bitcoin and I'm going to hold Bitcoin on my digital wallet. And with very few exceptions, there's nothing they can do about it. But we can take money out of their system, and we can have our own parallel system to trade money with. Now, there's a lot of problems with that right now because the world is not set up for that, right? There's everything from tax and regulation and all this other stuff. We are still so insanely early. But we can play a different game. And whether one of your listeners, is thinking like, oh yes, I agree with this. I am all for financial justice wherever. I'm going to join the revolution, or they just want to make more money so they can buy nice things. You can do both. You can do both with this. And for that reason, like I don't give out financial advice anymore. I'm not licensed to do so, but my philosophy is it's like an insurance. It's insurance against global financial collapse. It's also insurance against, do I think that the Federal Reserve is going to continue to print money and devalue the currency? Well, I know they are. There's no choice. And this happens to do really well, just like gold, when they do that. So in those cases, if I don't have some exposure to it, that's just irresponsible, because I mean, it's up 200% a year for the past 10 years. I don't know if it'll continue up like that. I believe it will, but it can only go to zero, right? That my downside risk is, let's say I put in $10,000 and I buy a portion of a Bitcoin. So by the way, you don't have to buy an entire Bitcoin. You can put $20 in and buy, they call them Satoshis. Those are like cents. But if I put $10,000 into Bitcoin right now and I just hold that on, the worst that can happen is it goes to zero. The worst. Now, history has shown that with all these bubbles and busts, et cetera, hasn't gone to zero, probably not going to. So in that case, the upside is it can go to, to infinity, right? The upside is quite truly unlimited. If it only reaches the value of gold, if it only replaces gold, I think that puts the value, I'm making this number up, but I think that puts the value of Bitcoin right around $250,000 per Bitcoin, something of that nature. The upside is tremendously limited, unlimited. The downside is very limited. And technology like this either goes to zero or it goes to infinity, right? It's not, oh, okay, we're just going to stay here. And to me, I'm like, well, I better have a portion of my money in there because it may do really well. It's not correlated to the stock market anymore. Some years it will be, sometimes it's not. It's not correlated to real estate. But then there's also those other aspects of I'm voting two big middle fingers to the global financial system. And I'm telling them that I don't like what you're doing and I don't have to be a part of it. I have to be a part of it somewhat. So I still have to, pay my bills. I have to pay my taxes. I have to do all that other stuff, but I don't have to let you keep my money, because as long as I think that Bitcoin over time will continue to grow, I'm going to put some money in there. And the worst case scenario, if the global financial system falls apart, worst case, hopefully it doesn't in my lifetime, at least I've got an alternative asset that nobody can stop me from spending. Now, I'm going to take a pause here and let you ask me some other questions. There's a lot of people have a lot of objections about Bitcoin, and they've got a lot of questions about it. Are there any off the top of your head that you'd like to ask me?
Well, one thing I want to ask you, because this does worry people, cryptocurrency or blockchain, you said it's not crackable, but at some point it will be. Would you agree? Or do you think that's not true?
Well, let me give this in two parts. Okay. So difference between Bitcoin and cryptocurrency. So Bitcoin, I've explained what it is. There's nothing else like it. It's a mechanism called proof of work is the technological mechanism that makes it so insanely hard to, crack, break, it's manipulate, et cetera, censor. And it's not controlled by any individual. Every other cryptocurrency has some degree of control, even if they call it decentralized, even if they call it this, that, or the other. It's been time and time again that it's shown there have been hacks. There's all these smart contracts on Ethereum and Solana and Avalanche and all these other things. There's hacks and there's exploits and there's other things. Absolutely none of them are nearly as secure as something like Bitcoin. So those crypto projects, crypto coins, are absolutely vulnerable. And they're also vulnerable to the same problems that we have, is that oftentimes, like even Ethereum, when Ethereum started with Vitalik Buterin and the Ethereum Foundation, they issued themselves, I don't know if this is accurate, but it's close. Something like 30% of all the ETH coin was issued to themselves, and then they released it to a lot of other people. Well, there's a misaligned incentive there. That never happened with Bitcoin. With Bitcoin, when it started off, you had to earn it yourself. You had to do the work to earn it. It didn't just get issued like, hey guys, here you go. Now, the difference with blockchain and Bitcoin is that, so yes, a lot of these other blockchain projects have a lot of things that they're trying to do. They're trying to be very cute and innovative, and they have a lot of technology, and there are hacks and exploits of what they call smart contracts all the time, and people lose a lot of money. It's one of the reasons I don't own any anymore. I actually own about $5,000 worth of Ethereum, and that's just a bet to where if I'm wrong and it goes way up, at least I get to participate, and I say I didn't lose out completely. So Bitcoin, could they hack it? People have tried to hack it, never been able to do it. There's a lot of incentive to hack Bitcoin. I mean, it's, at the top of the market about a year and a half ago, it was worth $1 trillion market cap. There's a lot of reason to hack the network. People have tried, they failed. Now, the one big question is, could they hack the blockchain? Oh, I'm sorry, could they hack the Bitcoin blockchain when quantum computing gets invented? Nobody knows. So one of the things is that the Bitcoin network does evolve. And if there's a big consensus of all of the Bitcoin developers and miners or nodes, I'm probably getting these words wrong, they can update the entire network, but it has to be a massive consensus of everybody, and it doesn't get updated very often. So some of the thoughts are that when quantum computing comes along, where it can break almost any code, et cetera, that the Bitcoin network may be able to utilize quantum computing to help protect itself. It's kind of like fighting fire with fire. At the moment, we don't know the degree. I've done a lot of research on this. We don't know the degree of hackability that quantum computing will bring towards Bitcoin. It's a potential danger. It's not there yet. But outside of the quantum computing threat, there is no credible threat to hacking the network. The biggest threat would be, like, can government stop it? So government can do a lot of things. Like there's some people who go, no, government can't stop it. They can't control it. They can't do anything. Well, that's not, the governments and the people who power the governments are really powerful. They got a lot of money. Now, the worst that I believe they can do is they can disincentivize people from using it to such a degree that it will dramatically depress the price. They can say you're banned from owning it, you're banned from doing this, you're banned from this, and they can get really draconian in their bans. And that'll start to happen probably when things really start to fall apart. When the wheels start to fall off this train, they'll start to pull out everything they can. However, they can help manipulate the demand for it, but they can't stop the network. They cannot stop people from transacting in Bitcoin. The only thing they can do is mess up the demand for and the exchange rate between US dollars and Bitcoin, right? But one Bitcoin equals one Bitcoin. And if you and I start to price our own energy, life energy into Bitcoin, they can't stop us from trading Bitcoin. If you're in this ecosystem, they can't stop you. It's impossible. 99.9% impossible. So do I think governments and financial powers will try to harm the network? Yeah, I think the most they'll do is potentially harm the price of it. But the worst they can do is send it to zero. And they've had a lot of incentives to do that already, and they haven't been able to do it. So I'm not too worried about it. The other piece of that I look at is if they start to take a direct aim at the Bitcoin network and Bitcoin users, et cetera, they are now exposing massive draconian policies that make the use case for Bitcoin 10 times greater. Like, wow, they really don't like this. They really want us to get rid of it. To me, that says, I better own some. The other thing is, you know what else the government say they don't like? Drugs. It's a pretty big industry out there, is illegal drugs, right? Just because they ban it doesn't mean that people, if there's a market for it, people are going to continue to use it. And realistically, I think we all know the government is in the drug business. There is such an incentive to not win the war on drugs because there is so much money being utilized in government and contractors, et cetera, to continue to fight the war on drugs. They would much rather have the war. It's much more profitable than to win the war. And it's an unwinnable war because there's people who want it and there's people who won't want to use it regardless if they're going to spend their lives in jail. This is even more important than that. So that's how I look at that.
That's a really good answer. Great explanations, beautiful illustrations.
Yeah, thanks.
Very, very good.
One of the
I,
other, go ahead.
well, I want to ask you this. So, um, let's say now we understand a lot of the principles behind both money and Bitcoin.
Yeah.
I like that you separated Bitcoin out from the other types of cryptocurrency. And the other thing I would like to know, though, is okay, how do you practically go about purchasing
Mhm.
Bitcoin safely?
Great. So one of the easiest ways to do, Coinbase.com. There's a lot of ways to do it. Coinbase.com is probably the most well known, and it's a publicly traded company. I believe they're fairly safe. The easiest way, there's different ways to do this, as I said, but whenever I tell people brand new to this how to do it, I say go to Coinbase, follow their instructions, and set up an account. You'll have to submit your ID. You'll have to do all this other stuff called KYC, or know your customer, and then you can you can connect your bank account, or you can wire money in. There's different ways to pay for it, and you can push a button and you can buy Bitcoin. You buy $20 worth if you want. Buy 1,000. When I first started, I said give me $2,500 of Bitcoin and $2,500 worth of Ethereum, and then, like most people who don't know better, I just kept my coins on account at Coinbase. And I said, okay, you guys hold it. When I'm ready to sell it, I'll come back to you. Same as having your account at Schwab, right? Only it's not. So there's a term in the world of crypto and Bitcoin. It's like, if not your coins, like not your keys, not your coins. And that what that means is, I'm just going to continue to refer to it as Bitcoin instead of crypto. Um, Unlike dollars at the bank, right? Unlike stocks. Well, in the past, you could actually own the stock certificates. You could have those at your house. They're bearer certificates, and you could say, "I own the stock in Disney." Well, this is very similar to that. But if you have your coins at Coinbase, they actually own them. If they got hacked, if something else happened, yes, you could lose all your money. And there is no FDIC for recovering lost crypto, right? So if you lose it, you've lost it. But what you can do is you can take those coins that you buy on Coinbase, and then you can send it to your own wallet. Now, a wallet is simply a piece of software. You can have a wallet that is like a piece of hardware. It looks like a USB drive, or you can have it on your phone. So, for instance, Coinbase has a Coinbase wallet, which is different than a Coinbase account. And what it is you're the only one who has access to it. You don't want to forget your password, but you can buy your coins on Coinbase, and then you can send them to yourself. You can send them to your wallet. Now, what's interesting about wallets is that although I may have $1 million sitting on my Coinbase wallet here on my phone, it's not actually there. I could lose my phone. I could lose my USB drive. I could, lose it forever in the bottom of the ocean, and I still can access my coins. Because the interesting thing about this is the coins don't live in a single place. The coins are all entries on a ledger that is distributed amongst tens of thousands of computers worldwide. My wallet with my password is simply my access to the ledger. It allows me to access it and say, hey, I own those, I'm going to move them. But as long as I know my seed phrase, which is my password, I can lose my phone, I can lose my USB drive, I can go buy another one, I can enter that code, and boom, it's all recovered. I'm the only one who has access to it. So that's when it comes to safety. More people lose money in crypto and Bitcoin from losing their passwords than they ever do from the prices. But with that, it comes a lot of responsibility of like, you have to be really good, like operational security. Make sure if you're going to buy this, if you're going to store it yourself, you're not going to lose it. But it's one of those things that's not easy. It's not as hard as it was years ago, but it's not as user friendly. I can't imagine. Like, I've gotten my mom and dad on this, and yes, it was a nightmare trying to explain to them all the technical things they have to do, even though it's not that technical. But they're used to just having somebody else. They're used to trusting another company with their money. And these days, the bottom line is you can't trust people with your money. You got to start taking responsibility.
That's great. I like that description. I'm going to give it a try.
Thank you. It's fairly easy, and the goal is to start small, and it's to have a little bit of skin in the game, because if it works out really, really well. And if it doesn't, if you've only got a little skin in the game, you've only lost a little bit. But The other piece of advice I like to give is don't put money in that you need to touch for 4 years. That's my
Don't
little,
put money in that you can't afford to lose.
yeah. Or at least,
Yeah.
but a little bit more is like have at least a 4 year holding period. If I'm going to put
Yes.
$5,000 in, historically speaking, every 4 years, I'm positive no matter what time period I got in, I'm going to be I'm going to be in the black within 4 years, even if I have the worst timing. Like you could be the unlucky lady who buys it the tip top of the absolute peak of the market, like in 2017, and you were the last one in before they yanked the musical chairs, and it went down to 3,000, from 20,000 to 3,000, and you're like, this is terrible. If you waited 4 years, you're back in the positive, and that's happened every single time. So the worst case scenario, hang on for 4 years, but like you said, don't do it if you can't afford to lose it. And then if you put the money in, take the time to learn about it. There are so many cool resources out there. I discovered one just recently, like just the other day, called Bitcoin.rocks. Bitcoin period ROCKS, and it's got a lot of great things. It's like, oh, tell me about this, tell me about that, and it takes you to a description of that aspect, like the environment. Right? There's a lot of Bitcoin gets blasted by a highly corrupt and ignorant media about Bitcoin is so bad for the environment. It uses more energy than the like several nations combined, and it's super energy intensive. And look at the carbon footprint of Bitcoin. And that's due to its proof of work mechanism, because there are tens of thousands of computers running around the clock, basically, doing all these things. It generates so many terawatt hours of energy that it's mind boggling. But what they don't understand is a few things. Number one, 66% and growing of all the energy consumption is from renewable sources on the Bitcoin network. It is one of the greenest technologies out there for that reason. Number two, it doesn't, like, people think that Bitcoin produces, like, pollutes. It doesn't. It simply buys energy at market rates. It buys the energy. It consumes energy, but it doesn't produce energy. It needs energy. And just like anything else, our washer and dryer. I read the other day, and I think this is true, but I didn't verify it on another place, that every year, I think it's the world's or America's Christmas lights consume more energy than Bitcoin. Christmas lights. So when you think about that, like what's the use of it? But these are other things that are consuming energy. Now, and I'm going to leave my favorite piece for last on this energy thing, but it's actually one of the best things for renewable energy. And here's why. In order to have renewable energy, you need to have somebody to buy that energy. And renewable energy can be it could be a volcano way out in the middle of nowhere. And it's really hard to transport that energy that the steam produces from geothermal into other places and to sell it. But you can hook up a Bitcoin mining rig up to it so that that steam produces the power that powers these machines. And then these machines produce Bitcoin, which can be sold in the market, which means that this company who's producing renewable energy has a market for it, which can sustain it so that it can actually sell the other energy to people who need it. And so it actually encourages renewable resources. But for me, the most important piece is it's worth it. We have, for the first time in history, one of the most important inventions, which is a sound money that you cannot F with. Nobody can screw with it. And that is so important. It has the ability to set so many people free if we start to adopt it continue to adopt it at a global scale. To me, that's a worthwhile use of the energy. And anybody who says it consumes too much, it goes, well, it depends, compared to what? And to me, it's worth it. And hopefully, your listeners will start to look into this and go, okay, this might be worth at least my attention as well.
That is really excellent. I would love it if you would send me more resources
I would be happy
beyond
to.
Bitcoin.rocks,
I'm happy
because
to.
this is so many people want to learn about Bitcoin. The stuff that I've read made me more confused than I was before.
I'll send you a
And
few things that I think you'll like.
yeah, and I feel like I really understand so much more having heard what you had to say today. I mean, I
Good. Well,
really feel like I get it.
I'm really glad because I don't talk about this a lot outside of just with individual friends, and this was a fun way to kind of try to encapsulate a fairly complex topic into somewhat simple terms that has taken me several years to continue to study, and I continue to study even though I feel like I understand it. I'm continuously reading more and more so that I can understand it even at a simpler level because, as I said, I do believe in it, but if you can't simplify it, then you don't really understand it. So I
So,
appreciate you
one
letting me
quick
do that.
question. If you want to follow what's going on with Bitcoin, where do you go to find that information?
So I am a nonstop, um, consumer of Twitter, crypto Twitter, if you would, Bitcoin Twitter. So there's a lot of people I follow on there, but one of the best, like you can go to bitcoinmagazine.com. Twitter is a great place. If you just type in hashtag Bitcoin, you can see a lot of people talking about it. The problem is, on Twitter, you don't really know who to follow and who's full of crap and who's not, but
Hmm.
there's no individuals. Bitcoin Magazine is a pretty good one though.
Okay, Bitcoin Magazine, great.
Yeah,
And the last thing is, how easy is it to get back out of your Bitcoin? Somebody wants to take some profits,
very easy.
have some
Easy,
crazy
but not
cash
as easy
to.
as like as I said. If you let's say you've got an IBM at Schwab or something like that, well, you just log in, push a couple buttons. So it's not that easy, but it's not that hard either. So all I do is I open up my wallet, and the first thing I do is I'll open up my wallet, and then I'll open up if I'm using Coinbase as the exchange, but I'm using a wallet on my phone or my thumb drive, and I'll say, okay, I need to send the money to back to Coinbase or the exchange I'm using. So all I do is I enter in one address, I enter the amount, and I hit send. I may have to wait, 5 minutes, 20 minutes, or whatever for the coins to confirm and get there. And then when I'm on there, I just go sell for cash. So it just takes one extra step. It's not that challenging, but it is an extra step. But it's also the price you pay to have full custody of your of your wealth that is outside the confiscation of anybody else.
Perhaps not as much time as it takes to stand in line at the bank.
Not at all.
And
And
banks can be worrisome.
one of the other things, Dr. Deb, have you ever read this classic book called The Creature from Jekyll Island?
I've heard it referred to many times. I have not personally read it.
So
Yeah,
I
I
read
think
it.
it's a great, but I know about it and it'd be a
Yeah,
great read.
I read it like 20 years ago, and it didn't have nearly it had a minor impact, but I just reread it here last month, and it had a renewed oh my god impact. It is The Creature from
Yes.
Jekyll Island is the really the story of the Federal Reserve, but it reads like a mystery novel, like a whodunit, and it is so well written and engaging, and to me it should be required reading if you really want to understand and get a little bit pissed off about the global monetary system that we're living in, but you can't change it unless you understand what's happening. To me, it's just this perennial work of like, wow, I didn't know that. I almost wish I
Yes.
didn't. Sometimes ignorance is bliss.
That it is frightening sometimes when you read some of this stuff. And I think that's part of the reason people don't want to read it. It's
Guaranteed.
because it's too frightening.
Guaranteed.
Um, but anyway, thanks so much for coming on.
Thank you
Uh,
for having me.
any last recommendations for us, especially as is involved with Bitcoin?
Learn about it. To me, that's the single best way is to buy a little, even if you don't know about it. And then once you got some skin in the game, start to read about it. Do not feel as if the fact that you don't get it right away means something's wrong with you. Nobody gets it right away. And then when they get it, it's like a hammer, like, to your skull. You're like, boom, I get it. Like, ding, ding, ding. Now I get it. Like, there is that magical moment where it's like all these things coalesce and something clicks. And you're like, okay, I get it. And even then, that's usually the start of the journey of being forged into just somebody like, you'll never get Bitcoin though unless you really understand the global monetary system that we're in. Once you do that,
Agreed.
you'll
Agreed.
realize that okay, people will say Bitcoin fixes this. That's a big saying. Bitcoin fixes this. Well, you don't know what it fixes until you know what's broken. So you don't know the value of something as a like medicine until you know what that you're sick, right? And then we like, oh, okay. So if we do this, this fixes that, and I can okay now I understand it. Otherwise, it's just a get rich quick scheme.
Yeah, it is so important to understand money in general. in terms of history, what's gone on, and what is.
Absolutely.
Once you get that, Bitcoin could fit into that. But I think you're right. Until you understand that, you're really a little bit adrift.
Yep,
So
absolutely.
thanks.
Well, thank
Thanks
you
so
for
much
having me.
for you're just an incredible teacher. Thank you so much.
I
It's been a
appreciate
total
it.
pleasure.
Thanks for having me on.
This is Dr. Deborah Ekstrom for the Money Loves Women podcast. To your health, to your wealth, and to your happiness. May blessings and Bitcoin rain down upon you.